Hello everyone, it's a great pleasure for me to talk to all of you today. Now, what are we building in our bank? We are aspiring to build a world-class bank. When you see the vision statement of a bank, it says to build a world-class bank, now listen carefully, to build a world-class bank guided by ethics, powered by technology, and to be a force for social good. The way we make our credit card business, we were ethical and transparent with our customers. The way we built a savings account proposition, we're ethical and transparent with our customers. The way we built every single proposition, we want no hidden charges. We want every penny received by the bank to be truly earned by the bank. Now that's what we're building at the core. Digital enables things that normal physical ecosystems don't enable. Digital does not distinguish on the basis of rich or the poor, because remember, we are a bank for the rich, for the middle class, for the poor. Digital does not differentiate. Digital is enabling you to go down to the bottom of the pyramid, which people cannot do normally. If you thought of the traditional way, unless you had a certain ticket size of a loan for a certain tenor, there was no profitability for the transaction because it is physical. But in the digital world, you can go sachet that transaction for shorter tenors. You can do all of these transactions because the operating cost is much lesser. The third thing is social. I described that to you because all our efforts eventually has to direct for the society. By the way, you could be serving rich customers, you could be serving middle class, you could be serving the poor. But nevertheless, you are serving. And in India, for close to about 75 years since independence, the poor never got credit. Poor never could put an equity of say 5,000 rupees and buy and run a business of 25,000 rupees. Why? Because they never had leverage. That is a technology that is enabling that sort of a leverage, and technology and social good are actually connected in that sense. Ethical is the way we will do business. Digital is the means of doing business. And social is the what, is whom we want to address our products and services for. I hope through this discussion, you got a good sense of what we want to build in our bank. The power of our 25,000 people coming together, working on a common goal of ethical, digital, and social is really very powerful if we can all come together to make it happen. And the responsibility is with all of us, because I have no doubt in my mind that we are building one of the most amazing banks this country will ever see. For those of you who are joined us new and joined us from other organizations are probably not yet seeing the power of what we're building, because you're probably seeing your portion of the work. But I have seen businesses before. I can tell you the way we are building a bank digitally, the way we have focus, the way we are focused on technology, the way we are focused on ethics, the way we are focused on social good, we are building, in my opinion, an amazing bank. And the amazing bank that we're creating, you will get to see not very long, we'll get to see just in a few years, maybe two or 3 years from now. So thank you. I wish all of you the very best. Now, before we start, I must request all of us to pay a homage to a very dear colleague of ours, who Pankaj Chakleja. So, good afternoon, everybody, all members, shareholders. It's a great pleasure for me and for all members of the board to speak to you today. Now, the vision of the bank, we say, is to build a world-class bank. We see it as a very big opportunity. In India, actually, you see very few banks actually of notable scale and size. We believe that we have the right platform here,
And India is a growing country. There's lots of opportunities, and if we just play with a straight bat, don't do shortcuts, build a strong foundation in initial stage, we believe we can build a really strong bank in the long run for our country. And we want to build a world-class bank. We want to be guided by ethics. We'll talk about that. We want to power by technology. It's the big thing that can move a lot of things. And of course, we believe it can be a force for a social good. So, with your permission, I wanted to come straight to the point, about as quickly to the point as possible. People ask us whether you can continue to sustain the CASA at 50%. This competition in deposits, can you continue to grow? Now, as a bank, I'm really happy to share with you that over the last few years, we have just launched a large number of products, and each one of these products we believe, has a big opportunity of growing. We actually launched many versions of our product. We've got Freedom Account, Money, Merchant Multiplier Account for merchants, First Wing, Dynamic Professional Account. We launched a number of savings propositions. So basically, the bank has been just launching a large number of propositions. I want to just share with you that it's really quite amazing that if you recollect, this was the period of COVID. In COVID period, our deposits, both the retail deposits, grew from 33,000 crores to 63,000 crores. That's a growth of about 30,000 crores. I must say that this sort of a goodwill is enjoyed by very, very few institutions. And mind you, this was a window in which money was really going down to the large banks, and SBI and all the names that are going in the press at that point of time. That in that period of COVID, for our bank to raise 30,000 crores of deposits, I tell you, it is really something that was sensational for the moment, close to like 100% growth. And in absolute terms, it's a significant amount. So this tells us, actually, it does give us the confidence that we do have, and mind you, at that point of time, we were posting losses as a bank for 6 quarters in a row for many reasons. And in loss environment, COVID, and at that time growth, it says something about our bank. People do trust a bank, and of course, it's our job to live up to it. And then, and last year we dropped deposit rates, peak deposit rate by 2%. Still, our CASA continued to grow. And you can see what happened last year. The CASA deposit we touched very quickly. We touched 50%, but then it's been, after dropping rates, at CASA rates have been stayed 50%. So some of you who are probably concerned, saying that, listen, can this story continue? I must say that products I talked to you about, we focus a lot on a service excellence. We tell our employees all the time, saying that don't disturb customers, don't charge fees which you think should not be charged to customers in this way or that way. We abolish the concept of any home branch, non-home branch. So we are trying to build a concept of culture of customer first in terms of the products and the proposition we are making. And it's not through the small acts. We are systematically designing them like that. When we launched the credit card program, for example, we'll talk about that a bit later. We said that, in fact, a couple of days ago, I was on the way I was traveling to one of the cities, and I met someone at the airport. And that person told me that, in your credit card, 3 or 4 days before the billing date, I'm getting an SMS saying that, look, you need to pay this money. He says, I have, another credit card. I often end up missing that. I pay them 250 rupees as fees, but in your bank, I never pay fees. Now, I don't know as a shareholder whether you're happy or not happy with that, but I can only tell you that this is a very fundamental thing we are building in the bank. Before the customer go over the limit, we inform them they're going over the limit. Please don't spend money, otherwise you might have to pay a charge. So every single way, when it comes to reward points, for example, we're telling customers that you don't have to, we will never expire reward points. We actually are letting customers, encouraging them to redeem it. What we are doing is actually flashing reward points on the screen. Next time the customer going purchasing any item anywhere in the online market, we're able to show them the reward point. They can consume it. So every way we're systemically making this a customer first bank, and somewhere all of that goodwill or so I assume somewhere is rubbing somewhere on the bank. But I can tell you that this is something that we want to keep is very important to us. So long story short, we do feel that we always have anyway paying a little of a premium over the other banks as far as the deposit rate is concerned. We can always add more branches if we require. I can tell you that honestly that our end, we are not feeling any stress of being able to raise deposits at all. I told you, if we can raise 30,000 crores in COVID, then this is our peaceful conditions. It's really nothing for us. We will just moderate it to the extent we really need. The next question is about growth. Now, this is the second question people ask us. Listen, you've been growing at 25, 30% on the retail side. Can you continue to grow? Now, I just want to say that here too, we have a set of products is very large. The important thing is that our play in this segment is we are a very small player actually in that sense, because we just can grow indefinitely, I feel. Let me give you a number. For example, our retail and commercial book put together is 1 lakh crores. For context, this market in India is 72 lakh crores. And the 72 lakh crores is split something as follows. The home loan market is something like 25 lakh crores. The car loan market is something like about 4 lakh crores. Personal loan market is something like about 7 lakh crores. The credit card market is about 1 lakh crores. The education loan is about 1 lakh crores. The gold loan market, depending on what bureau tells you what, is between 4.5 to 5 lakh crores. Now, these are all markets where, for that, so, and that's what I totaled up is only 44 lakh crores. On top of it, the small entrepreneur market, which is about less than 10 crore ticket size, that's also another 12 lakh crores. Then the agricultural market, that's about 14 lakh crores. If you add all of these, you will really see that this is a 72 lakh crore market. And top of it, there's another 65 lakh crore market, which is the corporate market, that is greater than 10 crore ticket size. So these are like insanely large markets. And by the way, they're still growing. As you know, retail market is growing in India by anywhere between 14-15%. So therefore, the point is that our share is really nothing. And we feel that the fact that the market is large is not the only reason. What is even more, and let me say equally important, is that we have developed some really phenomenal capabilities as a bank. It's not a 1 year, 2 year track record. We've been doing this in the two institutions Avatar put together, like close to about 12 years now. And literally, I want to show you the numbers here. Here, you might see on the screen that most institutions elsewhere in the world, they're all in 130. The screen's not working. Yeah. So 130% of GDP. This, you get the drift. Whether it is Australia, Norway, Canada, Denmark, all of these, and they're all significant countries. And India is 17-18%. So can you beat that? So it's been a long way for India to climb this chart and get here. Like, I don't know, maybe go past our generation for sure. I told you the numbers. It's 44 lakh crore market today on sale with 260 or 270 lakh crore GDP. You can do the maths there. So this is India is really not served enough in this space. And therefore, this is a very big market. I really don't doubt that. Now, the next thing is about the number of products the bank has launched in the last 2 years or 3 years. We've launched a large number of products. We launched the prime home loans. We already had the affordable home loans. The JLG is a fantastic business. It goes through a cycle once in a while, but we really like it. It helps us meet a large number of other private sector requirements. Also, car loans, education loans, gold loans. Many of these are new businesses. Credit cards are new business. Agri farmer loans, consumer durable two-wheeler, tractor, low-risk property. You get the drift. The whole list of things are there. I must also share with you how this has been going for the bank. You see the drift. It started at 94 crores, 70, 3,000, 5,000 crores, 7,000, 10,000, 13, 20, 32. Then on a bank platform, 42, 17, 1. So it should not really surprise you as to, you might then argue with, you might then argue saying that if, this is the same country with the same number of players even 10 years ago, then how could some player become 0 crores or 94 crores to 1 lakh crores? Just a large market is so very large. So I don't suspect 1 lakh crore becoming a 2 lakh, 5 lakh, 10 lakh crore market. I don't see this story stopping at all. And I think definitely we will be one of the strong players in this space. The next thing is to note about, even the corporate banking side. All of you know that initially for a period of time we brought on the corporate book because we had these large exposures which troubled us and all that. But for the last 3 years now, it's been stable, or you can call it marginally on the growth side. We like the business. And we are actually, I must say that at the board level, we have a board committees. The board is very focused on ensuring that the quality of credit on this side also is really very good. We have an independent committee. We have pretty low thresholds into going out to the credit committee. And I'm happy to say that in 3 years, we've disbursed close to about maybe 17, 18,000 crores of loans sanctioned, about 11,000 crores disbursed. It's not that we're getting low delinquency because of not doing any activity here, but really there's no action, no NPA, no delinquency here. We're quite happy with what we're doing here. So this is a very diversified book the bank has built. You can see that the consumer loans is about 14%, loan against properties 14, this is 11%, together this is 25%, infrastructure is now 5%, corporate, commercial, credit cards. It's a very, very diversified book the bank is building here. So the long story short is that, again, as far as this is concerned, honestly, we don't worry whether to grow at 25%. That doesn't look like a difficult thing for us on the retail side. Wholesale probably be flat, probably go up by 5 or 6%, 8%. We really don't set any specific target on the wholesale side, or for that matter, even retail side. I never go and push the people, man, I want 25% growth, I want 30% growth. We don't speak that language. We just ensure that we have good processes, good pricing, good technology. And frankly, in this business, numbers are coming just by itself. And of course, we are not the only players who grow. You can see even large players growing at 20%. You can see state-owned banks also beginning to grow these days. And for maybe you see how that game is going. Now, next is third question people do want to get some comfort is that how will the bank sustain asset quality from here on? I must share with you that post-COVID, our gross NPA has come down to 2.1% on the retail side, and the net NPA has come down to 0.9%. Now, of course, we were always very confident. I don't know if you remember, but in the Q1 of FY22, when we had to take the large provision because we have a formula-based provision for retail portfolios, and at that point of time, we came and guided the provision numbers for Q2, Q3, Q4, and we said that this will be the trend, and we actually guided the total amount of provision we'll take in the year. I'm happy to tell you that we landed on the dot, and that shows to you and to us that we are able to model our portfolio and get a really good understanding of what the credit losses is going to be, and our models are working. And Q1 of this year turned out to be even better. And now our provisions are low. You could see the number this quarter, just about barely about 300 crores. This is 0.9% of the book, and gross NPA was 2%, and net NPA was 0.9%. So we are pretty clear about what this book is and how it is behaving. But I want to share with you today, more importantly, the how of it rather than the what of it. The how of it is as follows. We follow three means for being able to, let me say, evaluate and keep a good track on the portfolio. One is how we source makes a very big difference. The second is what percentage of those customers we source return the checks unpaid. And thirdly, what percentage of those people who are returning the checks are we able to collect? Between these three, you are able to get a sense of NPA, whether whether gross NPA, net NPA, provisions, all of these come together. And that is why when we report asset quality, we don't talk about gross NPA, net NPA. We all know in the banking system, and all people who've been in this market know that gross and net NPA can be handled by write-offs and provisions. But that's not the game here. We guide our numbers gross NPA, net NPA, and provisions and credit loss. So this is asset together. It tells you the quality of the portfolio. Now, as a bank, I want to tell you that for all the loans we book, depending on the different product segments, we do something called a deduplication of records. This, by the way, I'm just sharing it step by step of what process we follow. We do something called deduplication of record, whether the customer taken a loan from us before. We check into the credit bureau. And by the way, in the credit bureau, we don't just go by the score of the bureau. We actually pick the variables from the bureau and then study the variables to get a true understanding of what's really happening at the customer end. Then we put the customer through a risk scorecard, and this risk scorecard, of course, has been built over a number of years through regression analysis and now through AIML, etc. Then for customers, we also check the banking statement. And banking statement, end of the day, when we analyze the bank statement, we're able to understand that between the 1st to the 5th of the month, how much the balance is, and so on and so forth. What is the probability of the EMI getting cleared if we were to give the customer a loan? Then we do a cash flow analysis. Then we do a financial ratio analysis. Basically, this is, loan to net worth and all the usual financial ratios. Then we do a personal discussion. Then we do a contact point verification. Then we do collateral checks. Then we do fraud checks. Then we do industry referral checks. Go to Google and go to do background to the director checks, etc. So you get the drift that we are also checking cash. We are checking and that is one of our fundamental matters. We check ratios, and we are doing a verification both by external and internal people and collateral. So this is the reason why our rejections in this business is as high as between 40 to 60%. And frankly, we don't at one bit bother about rejecting 40-60%. It is our, we are getting enough business, and for us to grow at 25 or 30% is really no issue. In fact, you have to moderate our growth in line with the capital requirements, and that's more how we think about it. So we don't bat one eyelid to reject, to reject 40% customers because it works well for us, and that's how the asset quality shows up for us. The next thing is to share with you how this whole bit about what percentage of customers have a credit history before they come to a bank. It all depends on what is the cost of funds. Let me say that when we were going back in time, when our cost of funds was 14%, at that time we were lending at 24%. Obviously, lending at 24%, meaning that about 70-80% customers used to be with no bureau record. Then, as the cost of funds started coming down to about 9%, we started, doing loans with about 80% or 70 to 80% customers with the credit bureau track record, which means that only 20 did not have a bureau record. Now our cost of funds are coming down to more like 5.5, and frankly, for a bank like any of the big banks, 5.5 may look high to them because they used to very low rates. But for us, like 5.5 is like nirvana. And now we are going to more and more prime segments because naturally we can afford it at the same margin. So that's how you're beginning to see that the percentage of customers who are having a bureau record before coming to us is 90%. And it does make a big difference. And that is why if you think of the risk curve, we are going down the risk curve because the cost of funds are coming down, risk curve is coming down. Now, this is another important slide for you to note that of these customers who have a bureau record, what percentage of customers have a score above 700? Now, again, you will see that we were 60%. Now it's 84%. You get the drift. So therefore, the bank is onboarding better and better quality customers. Now, what does this mean in terms of, this is one data point we have now indexed, and in fact, annual report we have given these numbers even without indexation, and we have actually shared the numbers. Let me be more precise here. This is like 10% of the checks that are being presented used to return pre-COVID. And by the way, when you go back 5 years in time, this is more like 15%. But then, better underwriting, the lower cost of funds came to 10%. Now, only 7% of the checks being presented are returning. So obviously, this bit of being able to doing this process, following it up with a good credit underwriting, and also taking better bureau customers is directly showing in terms of the number of checks that are returning. The last thing is about after the customers return their checks, what percentage of them were able to collect from them. Again, this public data, we put them, without indexing them to any number. We actually put out the actual numbers in our presentation, and you will see that pre-COVID, this number used to be about 98.9%. Now this is 99.4. I don't know if you will spot the significance of that, but even a 50 bips makes a huge difference when it comes to the credit loss numbers eventually in the organization. So therefore, this is very important, and therefore now you will see what is happening to SME. Again, we haven't indexed this in the spirit of being really open and transparent with everybody so that you can see what's happening underneath in the portfolio of the bank. This is very important. Pre-COVID, SMA 0, just to the uninitiated who are not people from not from the financial background, let me just say that customers who are delinquent between 0 to 30 days are called SMA 1. 31 to 60 days is called SMA 2, and 61 to 90 are called SMA 2. And this is 0, sorry, this is 1 and 2. And then after that is NPA. So think about SMA as the pre-NPA stage. Pre-NPA stage. So pre-NPA stage, this number was 3.5. Now it's 1.9. It's come down. Now SMA 2, SMA 1 is also the all-time low. SMA 2 is all-time low. So when I'm coming out at the end of the results, and oftentimes speaking to myself, Sudhanshu, Saptarishi, we talk to you at the end of results, and we tell you that our delinquency numbers are heading a particular way. We know it will head that particular way because the numbers are talking. It's not just what we feel about it. So the point is that, and the last point I'd like to leave with you before moving on is that even at the numbers early stage presentation, at this combination of this bureau record, this check bounce, And this collection, we were quite happy. The credit loss was close to about 2%. Now, with the right end, what I showed you, we are expecting internally that it could be as low as 1.5%, even lesser. But of course, we guide market. I mean, for this year, we guided 1.5. We think, frankly, the result will be better than that. So this tells you, so the short point I want to leave with you is that this is very something mathematical about it. It is not because the credit loss numbers, gross, net, everything is mathematical. And if the input parameters are right, the output will play out that way. Next thing is on the wholesale side. This is well known to you. I wouldn't like to spend much time on it, except to say that we are reducing exposure to the corporate sector because we had certain problems beginning. The top 20, top 5 industries, everything, infrastructure, all that is coming down, and we're quite happy with that. Now, this is the composition of our asset quality. The asset quality we got a 1 lakh crore of the retail and commercial book, which is giving the gross NPA of 2% and net NPA of 0.9. We got a 23,000 crore book giving you a net NPA of 0.2. You got a 6,500 crore book giving a net NPA of 11% in infrastructure. Those problems are known, so I don't want to go there. And the composite of all this is this. So our own sense is that this number should come down in the due course in time for the reasons I described earlier. We believe a net NPA also should come down, and we're actually expecting one large account to also solve in due course. We're talking to the client. It's a bit up and down all the time. It's not yet solved, but we feel that it is eventually will not lose any money there. Now, just to sum it up, all the numbers of SME, I told you SME was the pre-NPA stage. This is the NPA stage, and the NPA stage of the bank actually used to be always like 2% for a long time, like 10 years. It's come back to 2%. We can think of this as an aberration of COVID. The net NPA has also come down. We frankly expect within the bank, our own internal estimates are this number should come down going forward from here. Now, the corporate side, frankly, except, we had one large retail chain that bothered us last quarter, but we provided 100% for it. Other than that, even the wholesale book, we are not troubled anymore. It's in pretty good shape. Infrastructure, we know the issue, but frankly, I've described that before. At a bank level, we feel that, we're at 336, 170. This should come down, with that in due course as we deal with the infrastructure. Last thing is about profitability. This is the last part of the presentation. It's about these are other concern people have about us, saying that, listen, your ROE has been climbing, okay, but not bad. But then with this trend going forward. Now, I want to just share with you what is the composition of the return on equity so that you get a comfort out of this. Now, if you see the income of the bank, net interest income, this is where it all starts. This is the core, what the NII coming. So that number has grown by 25%, another 21%, another 32%. You should expect this to rise from here. I don't think we'll give you any surprises. It's a simple thing. It's a growing book. It has to grow. The second thing is fee income. This is very, very, very important. You see, last year our fee income grew 66%. Later, I'll tell you what is firing this up in the context of cost to income. Now, the third thing is about the core operating profit. This is what it all comes down to. The core operating profit, again, to the uninitiated, it is basically what you call the NII, plus the fee income, which is what I described earlier, is the core income. And then out of that, we subtract OPEX, and then we come to the operating profit. So this is what it is. Now, end of the day, as a bank, we spent a lot of money in the last 2 years because we had a lot of expenses to set up and all that. It's not that. It's a startup bank. We had to spend what we had to spend. But the important thing is that the income line was so strong for the bank. Incremental economics are so strong. The operating profit is still climbing. And I'm going to tell you, this is 1,100 crore. Next year, it became 1,764 crore. And by the way, this is the year we were setting up branches and all that. Then this year was COVID. Despite that, operating profit grew 8. Last year grew by 44. I have already publicly on record in one of my press interviews that we will expect this to grow by another 45-50% next year, and again 45-50% next year. Now you can hold me to that. So the thing is that this is how the underlying economics are playing out, and I can tell you something is very powerful about our bank. One key thing that you may have missed is that while this is growing at a CAGR of this CAGR is 36%, but the loan book grew only 6%. You've got to pause a moment and think about it. And by the way, I'm not talking income, I'm talking profit here. So if your book grows 6, but profit grows 36, there must be something powerful in the underlying economics. And I point to that. Now, all that finally has to translate to ROA. Now, again, if you put behind the pre-COVID period, because prior to that was the COVID wave two. But if you see the last 4 quarters, it is 150 crore, 281, 343, 474, and by the way, they're all coming. We and the most important thing, this is core, and when it's core, you can expect it to rise from there on. And the ROE, by the way, the pace at which it's picking up has practically surprised probably quite a few people. The ROA has become a respectable 1%. And I must tell you, what is very important about the ROA is that it has come from zero base. See, look at this number of operating core operating profit 1100 crore. At this stage, our loan book was about 1 lakh, say 1 lakh crore or 1 lakh 4,000 crore. So forget the one-timers that happen, etc., etc. But if you take a normalized credit loss of about 1%, 1.2% of the book, and 1100 crore, 1100, maybe 1200 crore, I knew this is a zero P&L game. At this stage, from that zero P&L game, you do the maths later. But coming back to this, in a normalized basis, the bank is now touching next year. If you take a 45 on this, it's going to head above 4,000 crore. And if you have a provision of about maybe 1,600 crores, so you're still looking at a PAT of over 2,000 crores this year. So our internal target when we made at the board was more like about 1,700 crore, but frankly, we're running a bit ahead of that. So I'm trying to tell you that the bank is really on a roll on an internal economics. Some of you are seeing it, some of you are not. But those who are not seeing it today will see it tomorrow. But we are pretty confident what we're building. The last thing is that people do ask us that, listen, why is the cost income so high? How will it come down from here? But the thing is that we should not forget that at merger, this was a 70,000 crore DFI book, DFI come corporate book. And DFI book by nature, it's not because, whether who built it or whether predecessors or today or whatever, even the smartest people in DFI do lend, have borrow at maybe 9%, 8.5%, and they lend at maybe 10.5%. The margins are really very thin, 1.5%. So in that kind of margin, really you can make only that much of a profit. Now our bank from that position after merger, then we on top of that low profits, and by the way, there were other NBFCs that converted to banks, but they already were making ROE of 18-20%, but we were not. We were making zero. So on top of it, we added expenses because we were low on CASA. So we put branches, we put ATMs, we hired 12,000 people, we did all that stuff. So you have a low profit, you add the people, that was like you could go down the hole, but we didn't, because our incremental margins were very, very strong. I told you that before, very, very powerful. So the point is that that's where the origin of a cost income ratio is. Just for context, our cost income ratio pre-merger bank standalone was 92% for that half year, 92%. So now 92 has come down to 70, mid 70s already. So I'm just sharing with you that this will come down from here. And I think some of you are concerned, but you will see the results as they come out over the next few quarters and years. Now, how will it come down? So again, you don't have to take my word for it. I'm going to give you 3 specific reasons why it will come down. One is that it's pretty simple and straightforward. As you scale up the book, if today our loan book is a 1 lakh crore, this heads towards a 2 lakh crore. As it heads there, we are not going to add that that number of people to make it happen. So our incremental OPEX should be pretty minimal, at least on the lending side. The book is going to grow, and that's straight. That straight adds to the NII and fee and all the stuff, income level. That is one. Number 2 is we have fee income. As a bank, we have not yet, powered up a fee income business. I mean, we started the businesses a couple of years ago, but then they're not yet powered up. For example, credit card business just started. It's a big fee generator. That will come of age. Let me say by next year, certainly it will be like strongly in profits. By the way, that's our internal estimates. Our wealth management business just started a while ago, and that doubled last year, like 90% up last year. That's a solid fee income generator. Our FASTag business just started. That's going to give us solid fee income. And our own cross-sell to the branches, we are doing an okay job in the sense we've not yet fired all the buttons there. That's a big one coming up. So really the fee income is the next big one that is going to fire up from here. So all this is income, this is income. The third thing is that we got about 23,000 crore or 22,000 crore of deposits. We're paying at about 8.8% or 8.7%. We're going to replace this at the 5-ish or mid 5-ish. So there's a 3% to take out of this. That's about 660 crore that is going to add to the income straight away. And of course, we are cautious about spending our money. We don't want to be frivolous with it. We take it seriously. We just focused on book. We spend our money judiciously, grow the book. It will sort itself out. So I want to just share with you, for those of you who are still finding it hard to believe, that even in my previous organization, the first 4 years, it was like 80%, 80%. So if you were invested at any stage in this page, you would say, man, what the hell, this bank, this company is ever going to ever, this will only go up like this. But it wasn't like that. After 80, once you get a certain scale and book starts growing, 80 became 70, 70 became 60, 60 became 50, and then kind of stabilized that, headed towards 48. So it does happen, it will come. But you should have some faith on this front. Now that's my closing comment with all of you. As a bank, I think that we did we do meet all the cut. We very high standards of corporate governance. Our board really is very, very, very focused. Every one of them is a stalwart in their respective careers, and very high on governance. Mr. Ashish Kamath is, if he has some time, maybe I'll request him to speak a few words somewhere towards the end. He's worked in pretty senior positions at some stage with JV Diamond, if I may say so. And, he's very fast. If any commentary comes from any sources which is even remotely touches the corporate governance, I think he gets very concerned. And, our board is very thin-skinned towards it. And I can tell you, takes it very seriously. On the growth front, I've described that to you, asset quality described. We are investing in the latest technologies. One of the reasons why our cost is also high is that as a bank, we're still catching up with a lot of, think about it, you've got to launch current account proposition. Someone's got to build it. The money will come tomorrow, returns will come, but today someone's got to go and build the technology, the linkages, the end-to-end chain connection. We had to launch a new mobile app that costs money. Even small things like giving a loan against FD, a line against FD, and withdraw it against the app to make the bills cost money. So that is early stage bank. What banks we have caught up maybe 8, 10, 15 years ago, we're building today because we're a new bank. And we're also doing the necessary digitization for the future. So that's where the cost is. But anyway, I explained that to you. It will come down. I told you cost to income. We are very customer first, ethical bank. I told you that we're first about it profitability. I've given you a picture. So that's my very quick brief about what we are building in the bank. I just request maybe my colleague Vaidyanathan to speak to you. And before I sign off, I must say that I very sincerely thank all of you. We've at least at the bottom line, our results have not been pretty for many reasons. But all of you have given us your faith and confidence, and it's a job to live up to that. To all our customers, since an opportunity, I just want to say many, many thanks for all your support and for banking with us. We want to serve you the best. We want to be the top class in corporate customer service. Thank you really for your confidence in us, particularly over the last few years. And to all our employees who are working so hard to make this happen. Frankly, I just happen to speak on behalf of the team, but really the 20,000, 25,000 people have worked to make everything happen. And to our regulator and to our who have really guided us very well during this entire period, I thank you all. Madhi, can you say a few words if you'd like to? Madhi, are you there?
Okay, so a very warm good afternoon to all our esteemed members, to our board members, and my colleagues. I'll just take a few minutes to give from an experience of an employee who has been part of this amazing growth that Mr. Vaidyanathan spoke about. I just completed 3 years, and let me assure you that each of the 3 years as we are building the building blocks of this organization has been wonderful. We have gone through the thicks and thins. We tided over the COVID crisis, and out of each of these crises that we have been going through, we have only emerged stronger, better, and faster. I would just like to sort of highlight the core thing which has always been helping us in this journey, and that's the culture. Our MD spoke about the always you first culture that we always keep in mind when it comes to our customers. When we are in doubt, we always err on the side of the caution, and we try to look at it from a perspective so that the customer can gain the most out of it. Whether it be our products, whether it be the services we like to front end, keeping our gates open, always giving that benefit of doubt to the customer and not trying to pinch that extra penny.
Salary day, huh? It's a delight for every employee and a tedious task for those who have to process it. But not with the IDFC First Bank corporate salary account. IDFC First Bank offers your employees fastest account opening solutions through tabs, app and web-based processes for your numerous employees. Oh, mister. Chill afterwards, huh? अभी और भी बहुत कुछ है. With our accounts, we give you numerous beyond banking offers that you can't refuse. और 35 लाख का एक्सीडेंटल डेथ कवर, 1 करोड़ का एयर एक्सीडेंटल कवर, अनलिमिटेड ट्रांजैक्शंस ऑन ऑल ATMs, attractive interest rates on saving accounts, वो भी monthly, lifetime free credit card जिसके reward points कभी expire नहीं होंगे, just like bar of cereals, quick loan processing. जानी और क्या चाहिए बोलो.
IDFC फर्स्ट बैंक कॉर्पोरेट सैलरी अकाउंट सही है.
मेरे पेरेंट्स दे आर नॉट वेरी एजुकेटेड, उनको ज्यादा नॉलेज नहीं है कि भाई MBA क्या होता है, आगे की पढ़ाइयाँ क्या होती हैं. एंड उन लोगों को IIFM के बारे में भी नहीं पता था कि ये कोई इंस्टीट्यूट होता है, यहाँ से होके मैं क्या बनूंगी, या उनको कुछ भी नहीं पता था. इवन ड्यूरिंग द परसुइंग लोन एंड अदर थिंग्स आई डिडंट गेट लोन बिकॉज माय फादर इज अ फार्मर. सो a farmer don't have such strong financial statements and other financial things which are required by the bank.
More of a mission than a necessity. My mother is very focused that both of us should educate, because I would say that we are first generation college students. Nobody from our family, both maternal and paternal, has went. I am actually one of the first people who has done masters.
Being a household with 3 girls and with the society, with the patriarchal society around, it was really difficult for my parents. So the other family members who were a bit well off than us, they also said like, if you don't have enough money, why do you have to educate them? Why are you going through all of this pain? Like, no need to give them a very good education. They can go to a government school, they can go to a vernacular school. Like, why do you need to?
स्कॉलरशिप मेरे लिए लाइक एक वरदान था, बहुत बड़ा रिलीफ था मेरे लिए, क्योंकि जब मेरा एडमिशन हुआ तो मेरे फादर को मिक्कर माइकोसिस हो गया था. तो मतलब हमारा बिजनेस और वो सब बंद था. तो मतलब एज ए स्कॉलरशिप रिलीफ पैकेज आया मेरे लिए, कि जिसने हमें बहुत हेल्प की मेरे MBA में. अभी
MBA स्कॉलरशिप्स आई वुड से लड़कियों के लिए बहुत इंपॉर्टेंट होता है. उससे एक फ्रीडम मिलती है, उनको एक राइट मिलता है कि मैं अपने एजुकेशन को कंटिन्यू रखूं.
Doing an MBA from a premium institution comes with the liabilities as well. When I entered this institution, the fees which I had to pay was exorbitant. So that's money which I've not seen before in my life because of the background which I come from. What happens here is that if I get scholarships from IDFC First Bank, there'll be a lot of other people who are downtrodden back in similar societies which I come from. So they'll not have the fear of having a financial burden as such.
When you know like you have the potential to work hard, but due to some economic constraints, it's difficult to reach somewhere. And then someone comes and gives you a little bit of hope. That hope goes a very, very, very long way.
Shikatiko.
Good afternoon, respected board members, dear shareholders, and my dear colleagues. We all heard Mr. Vaidyanathan on how a very strong foundation has been laid for the bank for the last few years. While the bank stands transformed across all key business metrics, we are continuously working on how we can create a more sustainable future through our approach to ESG and build value for our customers, communities, and all stakeholders at large. ESG means environment, social, and corporate governance. ESG has always been part of our operating principles. We all heard Mr. Vaidyanathan earlier when he was showing us the vision and the company seal, which embeds social good and ethics as core ethos. We can only be successful as an organization if we're mindful of the broader impact of our activities and consistently embed ESG considerations into everything that we do across the value chain. Ultimately, only this will help us deliver economic value for our stakeholders and positive impact for economy at large from a long-term perspective. On the environment front, we are committed to reducing the impact on the environment from our business activities. We are deploying various economic, environment-friendly operating practices across the organization, and we are also empowering our customers digitally to ensure that we have the Go Green initiatives. We are lending to a lot of environment-friendly sectors, such as electric vehicle segment, for which we are one of the preferred finances in the country. IDFC First Bank follows Equator Principles, which is an internationally accepted credit risk management framework for identifying and assessing and managing the environment and social risks while financing. We're also now a supporter of TCFD, which is Task Force on Climate-Related Financial Disclosures. On the governance front, we are very committed to best-in-class governance, transparency, and accountability. This is also reflected in our board structure. Our respected board members come from very diverse background and extremely rich experience. Over 90% of our respected board members are non-executive directors. We have a very strong risk management framework and fraud management framework in place, as well as a strong vigilance mechanism. I'm pleased to share that our bank has received Best Corporate Governance India Award 2022 from World Finance Organization. On the social front, we extended a lot of support to our customers and employees alike during unprecedented times of the pandemic last year. As a bank, we take a lot of pride in being an equal opportunity employer. We also launched a lot of initiatives last year for, towards our customer always first philosophy. As a bank, we are currently serving over 6 million customers in over 70,000 villages as part of our Bharat program, the rural banking program. More than 75% of our borrowers are women borrowers who have a household income of less than 2 lakh rupees per annum. We also extend loans for water and sanitization, which is a very, very unique program that we do under our Transforming Lives initiative for our Bharat program. Further, during the pandemic especially, we extended a lot of support for small entrepreneurs, small businesses, MSMEs by extending necessary funds to run their businesses. Similarly, we extended the affordable housing proposition across the masses through the country. Our bank has received Best Sustainable Banking Strategy Award from CFI last year for our ESG initiatives. We appreciate the support of our shareholders, customers, and employees on this critical initiative, and we are very committed to scaling up our sustainability efforts to support the environment and build resilience amongst the communities that we live in. Thank you so much.
Thank you, Shikha.
Ramaswamy, please go ahead. As there is no response, this was the last question. I now request Mr. Vaidyanathan to respond to your questions and queries. Over to you, sir.
Okay, first of all, our team has put together a lot of details here given to me, and I'm reading them out for you. Now, vision for the next couple of years, someone asked. See, frankly, I think the bank has built a really solid foundation. We are all very confident. You heard Madhavan speak and the others. Our foundation is very strong. What is foundation for a bank? A very good deposit base, which is granular. Don't disturb now. A very good deposit base, which is granular. Good capital adequacy. A very good lending machine, which is basically where you can count upon quarter on quarter to grow in a safe and stable manner, and diversified income, and finally many more booster shots in terms of income, which is not yet firing, which we're sure will start firing very soon. I'd say they're firing in a way, but the could do a lot better, like the ones I told you, wealth management and CMS and all that. So basically, we've got these 4 or 5 items going. They're all firing. So we are, very simply put, the next 2 or 3 years, we expect the loan book to grow continuously upward of 20%, and we say between 20 to 25%. We expect profit to lift off sharply from here. What we saw last quarter, I think, is just a start, and this is not the terminal item. This is set for a significant growth from here. A number of your people who have seen our performance over the last few years, if you've gone beyond the P&L but went underneath, you must have found really the quality of work that's going on. But for those who are believing only in P&L, you will see the result in the next quarter. So short point is that you will forget 2 years. Even if you take a 3-year, 5-year, 8-year, 10-year view, we believe that this bank is fundamentally set for a continuous compounded growth on deposits and loan book and profits as well. So that's what it is. So the second thing is, someone asked us, what would you like to build? Similar answer, except that we are also very proud. It's not just the numbers. Numbers all institutions post, and they grow, and the profit they make and market cap goes up. All that is fine. We too will do that. But we believe that what we are building at the core is something very, very powerful. When we say, customer first, and then we say that we want clean income in the bank, I'll tell you what we really mean by that. And that is not understood by people, that, because you're looking only at numbers. What is important is that when we say that our bank is making a certain amount of it, suppose you make, maybe in a few years, you make 4,000, 5,000 crores of profit, whatever we'll make. And supposing that out of that income, say 400 or 500 crores is income which we felt we took by the sly, and without informing, we took it this way, that way. We tell our employees that, listen, out of that money, a portion you're getting a bonus out of that, someone is getting salary out of that, some senior management getting ESOP value out of that. That is dirty money going to your home. Some money is coming to me, my pocket, because I also own shares in the bank. So that money, that's dirty money. So we call it dirty money. So we feel that because our bank will be built on very fundamentally, very, very clean items, and none of us want that money to our homes. So therefore, because our bank is built on fundamental such norms, what will happen is that when you take 3 years, 5 years, 10 years down the line, the bank will be made out of a lot of goodwill of customers. Today, customers has to really experience our bank and then only discover this. But hopefully, after 2 or 5 years, 8 years, people will be able to see the difference that a bank is giving when you bank with a bank. So this is the heart of it. This can't be valued, but this has some some secret value sitting inside that in a long-term sense. Now, this is what we are trying to build, and I'm telling you, it's not just my view. You can speak to Madhivanan, you can speak to anybody else. We all talk very similar stuff. There's Sudhanshu sitting with me. We've got senior leaders in this, hopefully in this forum. We all talk similar language, and we are having this concept down the line. Last thing I can tell you is that when we interact with employees, even employees get very proud with that. Only yesterday I was in Outpost location, a day before yesterday, and the employees could not stop for 15-20 minutes just telling us how the bank is doing, and they were so jumpy, they were so happy. They were sitting on 1 crore branch, in one particular branch which I had just gone to see, and the branch had a CASA of some 30 lakhs and the savings account of 2 crores or something. It's a startup branch, started about 10 days ago. I asked them what will be the size of the branch 1 year from now. I didn't have to say anything to them, no pressure. They said 100 crores. What do you think it will be next year? After that, will be 200 crores. It's so amazing. I don't know target. So we are building a bank on capabilities. We're not building on pressure. So we say, look, do you have enough resources? Do you have the right pricing? Do you have the right technology? Or if you're not right, they'll fix it for you. We are creating enabling environment, and numbers are coming by itself. So that is the ease with which you're playing this game. And I think all this will show, and will show. What you're not seeing is profits, but that I'm assuring you will see in the next 2 quarters, 3 quarters. You keep tracking this game. Now, when was the last dividend declared? The last time it was declared in July 2018 at 75 paisa a share. Next is, when can shareholders expect a dividend? Well, the board is sensitive about the fact that there should be expectations of shareholders in the form of dividends. And we do think that as and when the bank is in a position to appropriately pay dividends based on the advice and support of the board, we will decide and let you know. The thing is that we think that at the core, we expect our return on equity. To another question about what we expect the returns to be, I have already guided that we expect our return on equity to tend upwards of 15%. That is how our business is fundamentally structured. So when your bank is going to post upwards of 15, when I say 15, I mean upwards, I mean 16, 17% return on equity. That's the way our bank is structured, for probably a bit higher than that. So that's how the underlying economics are. So at that point of time, we may have to take a call, or even on behalf of shareholders, whether it is good to give a dividend or whether to reinvest in the company and keep compounding the equity from there. But that's that. We will come to it. Now, profitability, again, I answered this question, but I will just explain to you one quick way. Why are we so confident of our profitability? Okay, now we are one of the few institutions which has built a business, a lending portfolio, which gives us, where we have developed deep specialization. I'm just pointing out to you that to stay at a gross NP of 2% and net NP of 1% for 1 quarter, 2 quarter, 3 quarter could be a matter of a fluke. But for 12 years at a stretch, barring this COVID, okay, for 12 years at a stretch, and even COVID has come down back to 2% and 1%. It is a phenomenal model. I told you right early in the beginning that you don't have to take our numbers for it. You can also see the underlying way we're building it. I told you all those underwriting practices and all that. But in every business segment we are playing in, we have developed specialization. And more than that, we are playing in the prime of the respective segments. If you play two-wheelers, we take the prime of two-wheelers. If you do loan against property, we're taking the prime of loan against property. And so on. And if you do used cars, we do the prime of used cars. If you do personal loans, we do the prime of home loan, personal loans. Yes. So we get good credit, good processes, and good pricing. The reason why we get better yield is because the mix is different. So this is how we are managing to get good yield and good risk by staying in the prime of every segment. So that is what is the fundamental model coming about. Then you might say, well, yield come down. Yeah, it might come down a bit. Will this one come down a bit? Cost of funds also could come down. Our operating costs also could come down. Short point is that it's still making good return on equity. You keep compounding the machine, the bank will get to see very, very good return on equity. We don't need to do any very shorts. We just have to play straight, and this game will come through. So that's a very quick understanding about how our P&L is built. This is only on the lending side. I've not told you how our CMS is firing, Fast Tag is firing, wealth management is firing, goodwill is firing. In the next following question, my colleague just pointed out here that on the lending on the deposit side, we may be letting go of some fee here and there because we said customer first bank and all that. I'm telling you, the goodwill a bank enjoys is amazing, just amazing, because our employees reflect that goodwill. They meet customers with that much more confidence, and we rarely lose customers on the deposit side. Our accretion of deposits pretty fast. So we probably give something away in the form of let me say a bit of freebie bank, giving away a lot of maybe fee income off, but we get a lot of customer goodwill in the process. Now that's that. So about how do you see digital versus physical? Answer very simple. We feel that we want to be both. We are of course more digital than physical because we are a new bank, and therefore we had the benefit of not having very many legacies. So incrementally, of course, we are very, very, very digital, and many of you who complimented our app or complimented our network and complimented our technology, etc. Thank you for that. We'll improve further on that, but it's really very good. So we're a digital bank, but at the same time, of course, we also believe there is some benefit in physical also, and we'll play both. Now, with regard to someone said that your credit score build up in the app. No, thank you for the suggestion. We appreciate it. We will do that. Profitability of the credit cards, very simple to answer. Short answer is that we are very happy with the card business. It's been a phenomenally successful branch, but touching close to 1 million cards, close to about 2 million cards, so the profitability starts coming in. And we think that by end of this, i.e. in 23-24, our own internal estimated that should post about 100 crores of profit, and 24-25, our internal estimate is, so please treat it with the skepticism you should, because the numbers until they're done, they're not done. But our internal estimates are that this will cross like 400 or 500 crores of profit in the subsequent year. It's like a big takeoff. We've done a serious 2-3 years of investment, but that's how businesses are built. Now, branch profitability and activities, we thank you for taking note of that question. And we will continue to do more and more activities in the branch. Our branches are quite profitable, and they're actually as profitable as any other good institution in the respective space. We also find that we have more to do in terms of cross-sell, and it's one of the customers they pointed out that from Trichy that he's not been adequate cross-sell. I agree to that, and we'll do better. Next is DMAT. Actually, we are also going to build our own DMAT. We'll also have a few partnerships. We're actually building one more partnership. We feel that to your suggestion about putting up a broking firm, we feel really we don't want to put up a broking firm. That's a very long lead time for returns. We really don't want to go there. People who built it 20, 15 years ago, they probably built it. We are happier to be a bank and plug in a broking firm. The next question is about how the balance sheet is there, how it will look 3 years from now. I kind of answered the question. I told you if we grow up anywhere between 20 to 25% per year, I can only tell you if the balance sheet grows by 20 or 25, the profit will grow faster than that because the incremental profitability of the bank is really that much strong. Next question is about cross-sell again. Yeah, I agree with you, and we'll do more. New products launches. Yes, the last 3 years we've launched many new products, and we are think of gold loans, even the new car loans, even the prime home loans. Cash management existed, but kind of scaled it up. Wealth management, credit cards. I mean, the bank has rolled out one product after the other. But what is very special about the bank again is that we are very true to this philosophy, and about this philosophy. Every product we launch has something special in it. So I'm telling you, as a shareholder, well, depending on what your risk appetite is, you may choose to say invest in stock, buy a stock, or sell a stock. I leave all that to you. But as a customer, everyone should be a customer because something is special about the products. You will feel it, you will experience it, and then hopefully you will get to appreciate it. I mean, some questions are repeated. Permit me to move ahead. This one. What is special in some of the in the way we are building the bank on the ESG front? Someone asked this question. That Shikha spoke to about ESG. We've given her a specific responsibility to anchor that responsibility. Until last year, frankly, we didn't even look at it that closely. In the sense, our business is very naturally ESG, the way we think, the way our corporate governance is. What is ESG? Is environment, social, and corporate governance. So governance, we believe we really have a very good corporate, the environment. I don't know the banking system, how much is environment or not environment. Shikha will have to study that a little more. And social is, of course, that's part of a theme. So for us, ESG comes a bit naturally, but we didn't put it as a practice. So this year onwards, we'll look at more closely, and Shikha will give the necessary leadership for that. And next is a cyber policy should be the best. We fully agree. We are very focused on it. The way we think about it in the bank, we say, look, if the credit loss is not 1.5, 1.7, it's fine. Bank runs, it will be a 1 quarter issue. Maybe it's 1.3, will be great. But these are small matters. We can deal with it. There's a margin of error. But we don't want to get blindsided. And therefore, our risk committee head, Mr. Pravi Vora, is there on this call. He'll probably tell you he's extremely fussed about it. So, and he's the chairman of the committee. Our internal team takes cybersecurity very clearly. What I'm trying to say is that we can live with moderate risk, but we cannot risk with cybersecurity risk. So we can get blindsided. They recognize that risk. Mr. Ganesh Kumar is a veteran in technology and information technology. They are all in the committee, and I can tell you, not just cyber, even the way we look at technology. If there are, we look at it closely. We look at investments, we look at growth, we look at everything, and we meet the technology committee even in between quarters, and our board members do oblige us with that time, and if we request that time. Cross-selling of products from branches. Again, I heard that comment for the third time today. I do agree that we need to do better, but frankly, we have developed some good capabilities for that. What we were not doing is we don't put pressure on them. We don't say, oh my God, I want so much insurance, I want mutual funds, I want this. That kind of stuff will spoil the culture. So if you see my notes to the branches, and some of them is displayed today. And otherwise, you can walk to any branch and see if I visited the branch. You'll always find a note saying that don't push customers, don't sell them unnecessarily. If only if there is a real need for the customer. We emphasize this theory so much into them that maybe they're not doing as much into it, but we'll kind of moderate it. We'll give them better tools. We'll do better need-based selling and all that stuff. The customer service committee at a regional level. Thanks for the suggestion. We'll think about that. This issue about the fact that there's a joint holder, one of them got a preferential offer. The main holder, joint, did not get it. A joint person did not get a credit card. Those kind of issues, I'd say that we can do better. So. Can we maintain NIM at 6% in this competitive market? I told you NIM is short answer that we think that our current mix is giving us a proper 6% NIM. No problem with that. If you ask us what is our lookout for 2023, we feel NIM 6% will probably be there. Now, if you ask me to look far ahead into 24, 25, 27, 28, well, I don't know, it might come down. But at that point of time, see, because by that time mortgage may be a bigger proportion of the book, and so on. But I can't take a definitive position on that. We will play it by the year. But broadly, we feel that our mix gives us a better yield. And remember, as the yield also kind of moderates a bit, our operating cost also will come down because the scale will go up by maybe 20-25% a year. So that gives us income. Many more numbers will be firing. I told you a lot of buttons are just pressed. Those rockets are yet to take off. On the fee incomes, all that will come to you. I tell you, you watch our fee income quarter on quarter from here to a YOY check, of the quarterly profits. You will see the numbers coming there because we believe all of them are beginning to fire. And in fact, that is one of the key factors of reducing our cost to income ratio also, because I told you from the cost point of view, those will just give the income. So is it possible to bring down the cost income ratio to 55% by 24-25? Let me just say that we put out a bunch of long list of guidances when we put the, when the merger happened. You can see only that far. And so because, in today's tumultuous world, 5 years also, two issues are combining, you can only see that far. But I'm just happy to tell you that almost every single guidance we put together in the December of 2018 for 5 years from then, I'm just saying that whether it's NIM or retailization of liabilities, retailization of assets, ROA, etc., ROE, I feel we'll get to every one of them. Cost income, I think, is a bit on the edge. May not be 55, maybe 65, but still, adjusted for that, the ROA, ROE, we will get there. And I wanted to just share with you that it is not just any ROE. I just want to share that with you. It's not there's ROE and ROE. We've seen there are ROEs which gives you command you 5 times, 8 times the price to book, and some ROE that commands you, for the same ROE, may get you 1 time price to book. We believe there's something special about our ROE because the quality of income is going to be fantastic. It's not normal. It's very granular, and more than granular, it's got it's got all sustainable income inside that. Now, we have 5 things going in our favor. One will be a bank with good corporate governance, the tick. We'll be a bank with good growth, that will be a tick, positive, that will be positive tick. We'll have a unique properties in terms of intellectual property, which is how we're building scale. That will be a big tick for us because it's stayed 8-10 years, hopefully stay another 20 years. We tick all these 3. The only thing we don't post is return on equity. I tell you, when we will solve our issue of return on equity, I believe a bank will be valued what it deserves to be. And people like Morgan Stanley, etc., are valuing us today at $30, $34. They don't understand the bank. So bad debt written off. This is part of the normal process which we do because at a particular part of aging we provide for the loan, and for another part of the aging we charge off the loan to the P&L. But really, the write-off is actually coming out of the provided pool already. So it's nothing to be read very differently. And by the way, the bank has very good recovery practices from the write-off pool. By the way, when you talk of this 1%, 1.5 credit loss, etc., it's all all factors. So income from toll plaza. Well, the income from toll plaza, my colleague has shared with me, is close to about 80 crores a quarter. That is the first quarter, Q1 FY23. Last year, the fee income was about 200 crores. So that's that. COVID impact, has the business picked up after COVID impact? Yes, it has picked up after COVID impact. Now things are pretty much normal. Then the other issues about our employees vaccinated. Yes, they're vaccinated. They're back to work. We prefer them back to work actually. Fee income breakup. Okay, very quickly I'll share with you in the interest of time. You wanted a breakup of what is a component of fee income. Okay, loan origination income is 32%. Credit card and toll business is 16%. Trade and FX is 16%. General banking is 24%. Others is 5%. But let me just, I told you earlier that all of these have an opportunity to grow in a clean way, not the wrong way. Next is repeat of the same question. This is the same question. CSR expenditure. Where does our CSR expenditure going? Frankly, they are very well described in the annual report. I don't want to take you through that in great detail. Percentage of employees vaccinated. I've answered that question. Brand ambassador. How much do you spend on brand ambassador? What's the valuation? Well, some of them could be private and parties here, so I really can't share the numbers with you because there's privacy involved other parties as well. But we believe that we take note of a comment, but there's also value in the brand ambassador because truly an iconic figure, very well known across the world and across the country, respected personality. So I'd like to leave it at that. And I believe adds value, good value to the organization. Number of what is the trend on customer complaints? I'm very happy to tell you that as a bank, we are taking customer complaints, not only seriously, of course, everybody has to take it seriously, but more importantly, every single day we ask the teams to employ underlying processes. It's not about giving empowerment and about reversing a mistake. That is like so plain Jane. The way to think about it is that we are looking at systemic ways of solving it. What is systemic? The other day, I went to our own website the other day and I figured out, I tried to just log in as a complaint and I figured out that the system asked me for a loan number. I said, now the customer doesn't remember the number. How does the customer come and log in a complaint? So we said, okay, now you have, so these are kind of things that kind of, put frictions in the customer's place. So we opened up the gates. We said customer just comes, gives mobile number, authenticates, gives email ID, and logs in a complaint. No friction in the process. We opened the website gate. We opened the mobile gate. In the mobile gate, we are not just selling. In the mobile, we kept a prominent 3 places for entry. 3, not 1. And we don't even call it cute names. We call it customer service. So the 3 places we say customer service, customer service, customer service. Within the customer service, we plug a button so that the customer does not have to search. So we have auto-categorized the home loan, car loan, personal loan, etc. Customer can click that, menu opens, menu solves, customer solves, STP, end-to-end and back-end operations, the issue gets solved. So we are doing some such systemic solutions so that customer does not have to reach the call center. Our own vision is that as the bank multiplies, in size, suppose today 1 lakh crore, tomorrow becomes 2 lakh crore, until becomes 5 lakh crore. We don't need to have a call center that's multiplying in the same proportion. So we are going to make a very, very digital customer service proposition, and of course, coupling it with good culture and good service and good empowerment and all that. So share price, very, very quick answer. That our book value per share at the merger time. So the book value per share at the time of merger was 38 rupees. Now, for whatever reason, maybe some loans that took us back, or maybe lack of profitability, our book value per share over the last 3 years has come down from 38 rupees to 33 rupees. We're not proud about it. I'm just sharing facts with you. It's come down. It's amazing, frankly, that the share price at the time of merger was 38. Maybe today it's about 42 or 43. Now, basically, the share has re-rated and the book value has come down. I'm again saying I'm not proud of it that the book value came down, but I'm just sharing that somehow the market is appreciated more than anything else. It's actually price to book has gone up by about 49% since the merger. So the point is that we still have the goodwill of customers. We believe that when we start delivering return on equity and the market will see it, that is the only missing tick for us. And then the equity will compound, and then market will value it hopefully where it values, and hopefully the share does well from there on. But these are the early stage. I've run companies before also. The first 3-4 years when it is under construction, it feels like that. Okay, yet another comment on similar stuff on early stage. Now you see, have you seen a house under construction? How does it look? When it's under construction, house does look, messy and dirty and brick and kiln all over the place. But finally, when it's finished, you see how the product is. I'm just telling you, the house was under construction for 3 years, so you can see the finished product, from this year onwards. So that's that. Branches, I told you, we'll open branches as required. We haven't put any, so we anyway given a guidance of 800 by FY25. We're far ahead of that. But really, there's no fixed number from here on. We need deposits. Whatever is required to get the required deposits to, we will do it. As I told you, we'll also digital. Credit cost should come down to 1% and not 1.5. Well, the thing is that for the mix of our businesses, we should factor 1.5 and not less than 1.5. I mean, if it comes less than that, you should. But I think, frankly, this year is 0.9. So maybe it's a bit of benefit of recovery or wherever. But right now, the credit loss running is pretty low at 0.9. But mentally, you should factor 1.5. It's better safe to be there. And by the way, 1.5 is pretty good generally in the Indian industry. But particularly with our kind of composition of yield, because we manage the risk really well. And our risk committee head is also sitting here. Maybe he can, Mr. Ganesh Kumar is very experienced, seasoned person from, with a great record at RBI. Maybe he can comment on it. But I can only tell you, we run a risk very seriously. We monitor every indicator about how the through-the-door population, customer profile coming in, how much we collect, how much is the SMA, how much is the NPA, what is the underwriting norms follow, how do we improve the underwriting. It's a daily affair for us, and how to use technology. So we do it, and we believe we're getting a really good combination. The the legacy issue, etc. I talked about. I don't want to comment on any more legacy issues. I told you that I would not really pick only on legacy issue as if it's an issue. The bank has also has and had at the time. I'm referring to a capital first shareholder who's commented something on legacy. A bank also had wonderful properties that came from the time of merger, and it will only be a truly unfair of anybody to comment on unfairly here, because I told you there's a rural bank with phenomenal property sitting there. There's already close to 200 branches that somebody's sweat and blood had gone into setting it up. There was a phenomenal treasury team that was already operational in the bank. Before that, there's a gentleman called Paritosh Mathur who's probably on this call, the phenomenal person who's come through the ranks, through that structure, and really doing a wonderful job for the bank and ran our treasury operations in a smooth manner. Last quarter, if you saw treasury operations, most banks posted a loss, but our bank lost very low. That's because the way treasury was managed so well. There are so many phenomenal properties that have come in the bank. And I have to be honest with this. I'm not going to partake in this process of commenting anything negatively of the past, anything like that. Now, next is and it's true what I said, that there's a lot of value add that was there. Now, technology spend. Yeah, I told you this is a bit of early stage banks. Obviously, there'll be a little more technology spend because there's a lot of catch-up spend happening. I told you to put the video that you saw of current account proposition. It costs money to make it today. Someone was 5 years ago in some other bank. So our bank is having catch-up expenses also, and also of course digitizing for the what the normal work we have to do. So that we are at the early stage, so it will happen. But I told you we should stop bothering about all this. The way now CS is whether cost to income is coming down, yes or no, and whether our ROE is going up, yes or no. If that is coming, then I would imagine that every benchmark of compounding equity at the core will happen. Having the share expect dividend, already answered the question. Last dividend declared, already answered question. Waiting for all of these are answered. Anything else, Sanchu? Merger. There was one question on merger. Well, on merger, it is such that both institutions have expressed their respective interest. We've not started discussing value and valuation and all the stuff yet. I mean, all that will play out when it play out. But in spirit, the two organizations have agreed that the merger will happen. As and when the rest of the procedures play out, and we have anything material to share with you, we will share with you. Well, it's a place to work. We believe our bank is truly a really a good place to work, and our employees, etc. Now, just taking one last time to just check have I missed out anything out of the conversation that is there. Give me 10 seconds, ladies and gentlemen, just about. So thanks so many of you made some very good compliments to the team members, about how the bank has come in the last 3 years. I forgot to thank you for that. As I ran through the notes, I saw Mr. Tiwari, Mascarenas, a lot of people said lots of things. To all of you who felt good about our work and encouraged our team, thank you for that. So I think I'm done with almost all the points that I could come across. In case I missed anything, kindly feel free to be in touch with Satish Gaikwad. Let me just close this whole note by saying that you have been with us for 3 years. Many of you have through us through thick and thin. If the numbers are good or bad, many of you just said we believe in the management, we want to stay with you. I mean, we thank you for that very much. And it is our job to live up to it, and you watch for the results, upcoming results, and won't disappoint you. So thank you.
Ashish, you want to say a few words?
Sure. Thank you, Sanjeev. Good evening, dear shareholders. It's great. It gives me a pleasure to be addressing you all. You've just heard from the MD, Mr. Vaidyanathan, on the great progress the bank has made over the last 3 years. I can say with all, clearly and unequivocally that over the last 3 years, the bank has made tremendous progress in all areas around corporate governance, financial metrics, regulatory governance, customer origination, customer support, and as you can see from the bank's tagline, that customers come first, but it's also about growing in a very sustainable manner our profitability. The board and the audit committee, which I chair, takes matters of corporate governance very, very, a lot of importance is laid on that. I mean, at the audit committee on a quarterly basis, and even in between the quarters, the management is very transparent about issues. Issues are brought up to the board deliberates and spends considerable amount of time on all these issues. And I can clearly tell you that, as far as the culture and the environment goes, and the tone is set from the top. It comes from the board, percolates through Mr. Vaidyanathan, down across the entire IDFC team. Controls, first and foremost, doing business, with integrity, customer always coming first, and also ensuring that our financial statements represent what is true and accurate as far as the results of the banks go. And, I can clearly say, and, you'll be pleased to know that over the last couple of years, we've had zero divergences as far as our NPAs go, or as far as our loan loss allowance goes, based on the RBI audits. Clearly, our regulator, the board and the management, we'd like to thank them for the guidance and support they give us through this process as the bank continues to grow. And so for me, I think, in terms of the control environment, in terms of the transparency, the integrity with management conducts itself is fantastic. And I think what you will see over the next couple of years is a bank that will grow and continue to grow at double-digit rates, but in a manner that is sustainable, taking into account, all the things that I've laid out. Thank you.
Thank you, Ashish. Any other comments from any of the other directors? I encourage if anyone has any thoughts to share, any comments. You're a very key part of this team. Brinda, you want to say something?
Mr. Ganesh Kumar is putting up his hand there.
So Mr. Ganesh Kumar also put up his hand, yes.
No, after Brinda, please.
Yeah, Brinda, please. I think, Brinda, you may be on mute or frozen. We can't hear you. Shall we go to Mr. Ganesh Kumar and come back to Brinda? In the meantime, the operator can fix it.
Okay. Am I audible?
Yes.
Yeah. Okay. Thank you, Chairman and MD, for giving me the opportunity, and most importantly, the shareholders who are present. A lot of what the confidence and the comfort that shareholders get, customers get, regulators get, the entire environment gets, hinges on what the bank does. And in my view, and that's what I'm sure the shareholders will also share, is that the whole thing is about risk management. And fortunately for me, I happen to chair the risk management committee. Just wanted to give a couple of reassurances and then a couple of observations. The first reassurance is that this is one of the most important things that is given importance in the bank. Not only in the bank, in the board, not only in the board, at every employee level. Risk is something that is taken as the core of our business, and that's what the bank is for. Certainly, it is there for leveraging. Certainly, it is there to increase shareholder value. Certainly, it is there to add profit. But all that only to ensure that it is done with good risk management. So it's total risk management there. I would actually like to tell that the worst case scenario is what the risk management committee looks at, and like the MD said, it is not just the risk management committee meetings that are actually monitored. It could be intermediary. It could be almost on a continuous basis. Risk management is something that we do. And not only is it risk, it is also on the entire facet of operations that we do. So I think it will be just in order to say here that the shareholders' interests are taken care of. The bank is managing risks well, and as a committee, we will see to it that what is required will be taken care of. That's the first observation that I wanted to say. The second observation is a bank or any organization is only as good as the board is. Like Ashish said right now, most of the initiatives are top driven, but not only it is top driven, it is also bottoms up. So everybody is taken serious recognition of what they say, and the customer is also taken into account. So this is a good blend that is happening, and at the good blend that is happening, having been on the regulatory side, I would also say that the level of compliance, the compliance culture in the bank is something which one needs to look at, and therefore that is another thing which will give reassurance to the shareholders that things go in the right order. So those are the two things that I wanted to reassure. The other point that I wanted to actually leave at is having been associated with institution building, one or two examples I can say, like the National Payments Corporation of India and others. Building up, like Mr. Vaidyanathan said, building up institutions is a tough job. But building up an institution when the institution is also doing business is a tougher job. It's like actually telling a plumber, he starts doing the piping when the water tank is full and the water is being opened up. So he has to see to it that the pipe is actually done when the water is flowing. That's what is actually being done in the case of this bank. Rest assured that as a board, we will take care of what is required. As the management is showing signs of what is required to be done in cooperation with the board and with the people. And I'm sure this message has gone down to the lowest person hierarchy in the bank. And as shareholders, maybe this is something that we will do. And as the MD said, the shoots are actually, it's like the bamboo. Suddenly the growth will be there and the growth will be very fast. So that is what you're trying to see, and we are all hopeful that it will happen. Well, as a person associated with the risk, I do understand that if my risk is that I will become a bore if I talk too much. So I will stop with this, but just looking forward to complete cooperation from everybody. Thank you very much.
Thank you, Mr. Ganesh Kumar. Binda, you want to?
I just wanted to add one quick point. Just one quick point that customer first, you first is not just a slogan for us in the bank, but it's very much central to all the activities. And at the customer service committee, which I chair, we take the customer's requirements, we look at how we can improve our services for the customer. And every time we're thinking of new products, new processes, and new ways in which we can reach the customer and serve him better. Thank you.
Thank you, Binda. Hemang, any comments from you?
Yeah,
the chairman of the NRC.
What thoughts were going in my mind is that I have been associated with the board from the Capital First days, and I have seen the way this institution has come up in last 3 years. It has been the most difficult time in terms of the NPA problems that the bank faced in the initial stages together with COVID. I think we have survived that so well and built up so much of goodwill that depositors, customers, and shareholders all have stood by us. And the credit is amazing for the bank and the way it has been handled so far. The success of a bank depends basically in its underwriting abilities, including the risk management. And once you have developed that skill, and I think we have, should basically help us in future of taking calls. And since I'm part of the credit committee, I see how we take decisions in the credit committee, how professional it is. Once you follow those ground rules, that automatically the business will grow. And of course, the credit goes to the man at the top who understands this and appreciates everybody's participation in these committee meetings. So it's a very interesting phase. I have seen this. I used to always joke around with Vaidya that Capital First was a trailer and this is the main picture. Once we make this bank at the level of Capital First, it will be amazing feel for all of us.
Thank you, Hemant. Dr. Bhagwati, any comments? Can't hear you. Yeah.
Can you hear me now? I can hear everyone very clearly.
Okay, now we can hear you. We can hear you also.
Okay, good. Well, thank you to you, to Vaidya, to the other members of the board. I think it was a brilliantly run AGM. Thanks also to the shareholders. I have nothing to add in substance except to wish the bank well for the obvious reason that I am representative on this bank's board from IDFC Limited. So we are delighted that the bank is doing so well. And I hope I can add value in some way to the bank, given my own experience, which is much more kind of wider, not so bank specific, but yes, financial sector. So I would like to assure the shareholders, because this is an AGM, that to the best of my ability, given my own background, I will try to assist the chairman of this board, the various chairs of the various committees, and Vaidya, of course, to keep enhancing value. And profit is not the only thing. I think Vaidya has made that point. There are also social responsibilities for an organization like a bank. So hopefully we can all add value in our own little way, and let it be the start of a glorious chapter for IDFC First Bank. Thank you so much.
Thank you very much, Ajay. So thank you, Mr. Vaidyanathan. Thank you, all the directors who spoke. I hope we have addressed most of the queries that the shareholders raised in a fair amount of detail. I know it's been a long afternoon for all of you, shareholders and others. You have been very patient all through the day, and I'm grateful for that. Before I conclude the annual general meeting of the bank, please note that the business items as set out in the notice dated July 1st, 2022, convening this AGM, are taken up for approval of the members of the bank. I reiterate, as was mentioned earlier, that the window for voting at this meeting by the members will be available for the last 30 minutes immediately after the conclusion of this meeting. I request the members who have not yet voted to vote before the voting window is closed. Thank you for that. The board of the bank has appointed Mr. B. Narasimhan, practicing company secretary, as a scrutinizer to supervise the e-voting process. I authorize Mr. Satish Gaikwad, company secretary of the bank, to receive and declare the voting results. The result of the e-voting, along with the scrutinizer's report, will be declared within 2 working days of the AGM and would be communicated to the stock exchanges and also published on the website of the bank and NSDL. I once again take this opportunity to profusely thank our board members for their constant support. On behalf of the board, I would like to appreciate the management for their efforts in building a strong foundation for the future. Our employees are key partners in achieving the ambitious growth vision of your bank. They have displayed exemplary commitment, spirit of innovation, and perseverance in the face of a lot of adversity in the last year. Our sincere thanks to all of them for their passion and their loyalty in building this great institution. We are very fortunate to have a world-class and enlightened regulator in the RBI and SEBI and other regulators, and would like to thank them for their constant guidance and support of your bank. We would also like to thank all our customers who are really the only reason we are in business. Their support and loyalty are our most valuable assets as we drive towards our ambitious vision for the future. Lastly, I thank all of you, our dear shareholders, for your constant support to our bank over the years in very challenging circumstances. We sincerely appreciate your patience, your insights, and your support in helping us build a great institution that would be increasingly valuable to all of you. Thank you again.
Thank you.
Thank you.
Dear members, as instructed by the scrutinizer, we request all the members participating in this AGM and who have not yet cast their vote to do so in the next 30 minutes. Thank you.
As a successful business owner, you want to grow your business fast. However, the normal running of the business can involve hundreds and even thousands of financial transactions every month. Managing the business transaction volumes with simply opening a current account can slow you down and consume a lot of bandwidth and resources reconciling your business and your banking. You need an advanced banking system that's fully integrated and digitally equipped to handle diverse banking transactions accurately with minimum effort. Presenting IDFC First Bank's Cash Management Solutions, India's most comprehensive suite of banking solutions designed to handle all your receivable and payable transactions more effectively. Here's how it works. Receivable Management Solutions. Collections are the lifeblood of your business. This is why IDFC First Bank's Receivables Management has 5 unique features to make your collections simple, smart, and scalable. 1. Now you can collect payments in real time with instant credit directly into your IDFC First Bank account by availing QR code solution. 2. Accept online payments using IDFC First Bank's partnered payment gateway solutions. Got a website? Great! We'll seamlessly integrate with it. Don't have a website? No problem. Through customized forms, we'll set up the partnered payment gateway to help you collect desired customers and transaction-related information relevant to your business. 3. For voluminous inward e-collections, easily set up virtual collection accounts to get granular MIS capturing payee information for simplified reconciliations, or get your ERP integrated using IDFC First Bank's virtual account API. 4. For all periodic recurring receivables, schedule collection mandates using automated clearinghouse debits such as NACH or eNACH. 5. Got parts of your receivables coming offline? No problem. Now avail cash or check pickups from any single location with our GPS-enabled doorstep banking service, and for multiple locations, avail our cash management pickups with detailed MIS. Great, right? Wait, there's more. Payables Management Solutions. IDFC First Bank knows that timely and accurate payments are key to building a strong reputation and goodwill. Our Payables Management Solutions are designed to make your payments fast, convenient, effortless. Here's how. 1. Get started with IDFC First Bank's bulk payment solutions. It's pre-activated paperlessly based on the payment rules as defined in your board resolution, and effortlessly initiate file-based payments in bulk, either as single debits or multiple debits to your account. 2. Avail a comprehensive suite of banking APIs for fully customized and integrated payments with your accounting and ERP systems. 3. You still continue with traditional methods of issuing checks for payments and are voluminous? No problem. Avail our remote check printing facility that allows you to print checks with facsimile signatures at comfort of your office. 4. You can choose IDFC First Bank's escrow services for your structured and high-value deals to ensure transaction execution are as agreed among transacting parties in the escrow agreement. There's tons of other partnered offerings under the Beyond Banking Solutions with IDFC First Bank. So, why wait? Begin today and experience the most comprehensive cash management solutions. Brought to you by IDFC First Bank. IDFC First Bank. Always you first.
ಎಂದಾದ್ರೂ ಯೋಚಿಸಿದ್ದೀರಾ? ಫೋನ್ ಬಿಲ್, ಎಲೆಕ್ಟ್ರಿಸಿಟಿ ಬಿಲ್, EMI ಪ್ರತಿ ತಿಂಗಳು. ಆದ್ರೆ ನಿಮ್ಮ ಸೇವಿಂಗ್ಸ್ ಅಕೌಂಟ್ ಅಲ್ಲಿ ಇಂಟ್ರೆಸ್ಟ್ 3 ತಿಂಗಳಿಗೆ ಒಂದು ಸಲ ಬಿಟ್ಟಾಕಿ. ಆದ್ರೆ ಈಗ ಯಾರೊಬ್ರು ಸೇವಿಂಗ್ಸ್ ಅಕೌಂಟ್ಗೆ ಇಂಟ್ರೆಸ್ಟ್ ಕೊಡ್ತಿದ್ದಾರೆ. 3 ತಿಂಗಳಿಗೆ ಅಲ್ಲ, ಪ್ರತಿ ತಿಂಗಳಿಗೆ. ಮತ್ತೆ ಆ ಇಂಟ್ರೆಸ್ಟ್ ಮೇಲೂ ಸಿಗುತ್ತೆ ಇಂಟ್ರೆಸ್ಟ್ ಪ್ರತಿ ತಿಂಗಳು. ಯಾರಂತ ಗೊತ್ತಾ? IDFC ಫಸ್ಟ್ ಬ್ಯಾಂಕ್. ಇದುವೇನೆ ಇವರ ಆಲ್ವೇಸ್ ಯು ಫಸ್ಟ್ ಎಂಬ ಯೋಚನೆ. ನಾನು ಇವರೊಂದಿಗೆ ಸೇರಿಕೊಂಡಿದ್ದೇನೆ. ನೀವು ಸೇರಿಕೊಳ್ಳಿ. IDFC ഫസ്റ്റ് ബാങ്ക്, ആൾവേസ് യു ഫസ്റ്റ്. ഒന്ന് ചോദിച്ചോട്ടെ, ഫോൺ ബിൽ, കറണ്ട് ബിൽ, EMI ഒക്കെ മാസം തോറും നിങ്ങളുടെ സേവിങ്സ് അക്കൗണ്ടിൽ ഇൻട്രസ്റ്റ് 3 മാസത്തിൽ ഒരിക്കൽ. അത് പോട്ടെ, പക്ഷെ ഇവിടെ സേവിങ്സ് അക്കൗണ്ടിൽ ഇൻട്രസ്റ്റ് നൽകുന്നുണ്ട് 3 മാസത്തിലല്ല, ഓരോ മാസവും. ആ ഇൻട്രസ്റ്റിന്മേലും ലഭിക്കുന്നു ഇൻട്രസ്റ്റ് ഓരോ മാസവും. എവിടെയാണെന്നറിയോ? IDFC ഫസ്റ്റ് ബാങ്കിൽ. ഇതാണ് ഇവരുടെ ഓൾവേസ് യു ഫസ്റ്റ് എന്ന വീക്ഷണം. ഞാൻ ഇവർക്കൊപ്പം ചേർന്നു കഴിഞ്ഞു. നിങ്ങളും ചേരൂ. IDFC फर्स्ट बैंक, ऑलवेज यू फर्स्ट. कधी तुम्ही विचार केला? फोन बिल, वीज बिल, EMI दरमहा, पण तुमच्या सेव्हिंग्स अकाउंट मध्ये व्याज 3 महिन्यातून एकदाच. जाऊ द्या, पण आता कोणीतरी आहे जे सेव्हिंग्स अकाउंट वर व्याज देत आहे. 3 महिन्यांनी नाही तर दरमहा, आणि त्या व्याजावरही मिळतं आणखी व्याज दरमहा. माहितीये कोण? IDFC फर्स्ट बैंक. हाच तर आहे यांचा ऑलवेज यू फर्स्टचा विचार. मी तर यांच्याशी नातं जोडलं आहेच. तुम्ही सुद्धा जोडले जा ना. IDFC फर्स्ट बैंक, ऑलवेज यू फर्स्ट. நீங்க யோசிச்சிருக்கீங்களா? ஃபோன் பில், எலக்ட்ரிசிட்டி பில், EMI ஒவ்வொரு மாதமும். ஆனா உங்க சேவிங்ஸ் அக்கவுண்ட்ல வட்டி 3 மாசத்துக்கு ஒரு தடவை. விடுங்க, ஆனா இப்ப யாராவது இருக்காங்களா சேவிங்ஸ் அக்கவுண்ட்ல வட்டி தருவாங்க? 3 மாசத்துக்கு இல்ல, ஆனா மாதம் தோறும். அதோட அந்த வட்டி மேலேயும் கிடைக்குது வட்டி மாதம் தோறும். யாருன்னு தெரியுமா? IDFC ஃபர்ஸ்ட் பேங்க். இதுதான் இவர்களின் ஆல்வேஸ் யூ ஃபர்ஸ்ட் என்பதோட சிந்தனை. நான் இவர்களுடன் இணைந்து விட்டேன். நீங்களும் இணைந்திடுங்கள். IDFC ఫస్ట్ బ్యాంక్, ఆల్వేస్ యూ ఫస్ట్. ఎప్పుడైనా ఆలోచించారా? ఫోన్ బిల్, కరెంట్ బిల్, EMI ప్రతి నెల, కానీ మీ సేవింగ్స్ అకౌంట్ లోకి ఇంట్రెస్ట్ 3 నెలలకి ఒకసారి. పోనివ్వండి, కానీ ఇప్పుడు ఒకరు సేవింగ్స్ అకౌంట్ లోకి ఇంట్రెస్ట్ ఇస్తున్నారు 3 నెలలకి కాదు, ప్రతి నెల. పైగా ఆ ఇంట్రెస్ట్ మీద కూడా ఇంట్రెస్ట్ వస్తుంది ప్రతి నెల. ఎవరో తెలుసా? IDFC ఫస్ట్ బ్యాంక్. ఇదే మరి వీరి ఆల్వేస్ యూ ఫస్ట్ అనే ఆలోచన. నేను జత కలిసాను వేళ్లతో, మీరు జత కలవండి. IDFC ఫస్ట్ బ్యాంక్, ఆల్వేస్ యూ ఫస్ట్.
कभी आपने सोचा है फोन बिल, बिजली का बिल, EMI हर महीने, पर आपके सेविंग्स अकाउंट में इंटरेस्ट 3 महीने में एक बार? छोड़िए, लेकिन अब कोई है जो सेविंग्स अकाउंट में इंटरेस्ट दे रहा है 3 महीने में नहीं, बल्कि हर महीने, और उस इंटरेस्ट पे भी मिलता है इंटरेस्ट हर महीने. पता है कौन है? IDFC फर्स्ट बैंक. यही तो है इनकी ऑलवेज यू फर्स्ट वाली सोच. मैं तो जुड़ चुका हूं इनके साथ. अभी जुड़ जाइए ना. IDFC फर्स्ट बैंक, ऑलवेज यू फर्स्ट.
কখনো ভেবে দেখেছেন ফোন বিল, বিদ্যুতের বিল, EMI প্রতি মাসে, অথচ আপনার সেভিংস অ্যাকাউন্টে ইন্টারেস্ট 3 মাসে সির্ফ একবার? বাদ দিন, তবে এখন একজন আছে যে সেভিংস অ্যাকাউন্টের ইন্টারেস্ট দিয়ে চলেছে 3 মাসে নয়, বরং প্রত্যেক মাসে, আর সেই ইন্টারেস্টেও পাওয়া যায় ইন্টারেস্ট প্রতি মাসে। বলুন তো কেসে? IDFC ফার্স্ট ব্যাংক। এটাই তো এদের অলওয়েজ ইউ ফার্স্ট এর চিন্তাধারা। আমি তো যোগ দিয়েছি এদের সাথে, আপনিও যোগ দিন না। IDFC ફર્સ્ટ બેંક, ઓલવેઝ યુ ફર્સ્ટ। તમે ક્યારે વિચાર્યું છે ફોન બિલ, વીજળીનું બિલ, EMI દર મહિને, પણ તમારા સેવિંગ્સ અકાઉન્ટમાં વ્યાજ 3 મહિનામાં એકવાર? જવા દો, પણ હવે કોઈ છે જે સેવિંગ્સ અકાઉન્ટમાં વ્યાજ આપી રહ્યા છે 3 મહિને નહીં, પરંતુ દર મહિને, અને આ વ્યાજ પર પણ મળે છે વ્યાજ દર મહિને। ખબર છે કોણ છે? IDFC ફર્સ્ટ બેંક। આજ તો છે અમને ઓલવેઝ યુ ફર્સ્ટ વાળી સોચ। હું તો જોડાઈ ગયો છું આમની સાથે, તમે પણ જોડાઈ જાઓ। IDFC ફર્સ્ટ બેંક, ઓલવેઝ યુ ફર્સ્ટ। ಎಂದಾದ್ರೂ ಯೋಚಿಸಿದ್ದೀರಾ ಫೋನ್ ಬಿಲ್, ಎಲೆಕ್ಟ್ರಿಸಿಟಿ ಬಿಲ್, EMI ಪ್ರತಿ ತಿಂಗಳು, ಆದ್ರೆ ನಿಮ್ಮ ಸೇವಿಂಗ್ಸ್ ಅಕೌಂಟ್ ಅಲ್ಲಿ ಇಂಟ್ರೆಸ್ಟ್ 3 ತಿಂಗಳಿಗೆ ಒಂದು ಸಲ ಬಿಟ್ಟಾಕಿ। ಆದ್ರೆ ಈಗ ಯಾರೊಬ್ರು ಸೇವಿಂಗ್ಸ್ ಅಕೌಂಟ್ಗೆ ಇಂಟ್ರೆಸ್ಟ್ ಕೊಡ್ತಿದ್ದಾರೆ 3 ತಿಂಗಳಿಗೆ ಅಲ್ಲ, ಪ್ರತಿ ತಿಂಗಳಿಗೆ, ಮತ್ತೆ ಆ ಇಂಟ್ರೆಸ್ಟ್ ಮೇಲೂ ಸಿಗುತ್ತೆ ಇಂಟ್ರೆಸ್ಟ್ ಪ್ರತಿ ತಿಂಗಳು। ಯಾರಂತ ಗೊತ್ತಾ? IDFC ಫರ್ಸ್ಟ್ ಬ್ಯಾಂಕ್। ಇದುವೇನೆ ಇವರ ಆಲ್ವೇಸ್ ಯು ಫರ್ಸ್ಟ್ ಎಂಬ ಯೋಚನೆ। ನಾನು ಇವರೊಂದಿಗೆ ಸೇರಿಕೊಂಡಿದ್ದೇನೆ, ನೀವು ಸೇರಿಕೊಳ್ಳಿ। IDFC ഫർസ്റ്റ് ബാങ്ക്, ഓൾവേസ് യു ഫർസ്റ്റ്। ഒന്ന് ചോദിച്ചോട്ടെ, ഫോൺ ബിൽ, കറണ്ട് ബിൽ, EMI ഒക്കെ മാസം തോറും നിങ്ങളുടെ സേവിങ്സ് അക്കൗണ്ടിൽ ഇൻട്രസ്റ്റ് 3 മാസത്തിൽ ഒരിക്കൽ. അത് പോട്ടെ, പക്ഷെ ഇവിടെ സേവിങ്സ് അക്കൗണ്ടിൽ ഇൻട്രസ്റ്റ് നൽകുന്നുണ്ട് 3 മാസത്തിലല്ല, ഓരോ മാസവും. ആ ഇൻട്രസ്റ്റിന്മേലും ലഭിക്കുന്നു ഇൻട്രസ്റ്റ് ഓരോ മാസവും. എവിടെയാണെന്നറിയോ? IDFC ഫസ്റ്റ് ബാങ്കിൽ. ഇതാണ് ഇവരുടെ ഓൾവേസ് യു ഫസ്റ്റ് എന്ന വീക്ഷണം. ഞാൻ ഇവർക്കൊപ്പം ചേർന്നു കഴിഞ്ഞു. നിങ്ങളും ചേരൂ. IDFC फर्स्ट बैंक, ऑलवेज यू फर्स्ट. कधी तुम्ही विचार केला? फोन बिल, वीज बिल, EMI, दरमहा, पण तुमच्या सेव्हिंग्स अकाउंट मध्ये व्याज 3 महिन्यातून एकदाच. जाऊ द्या, पण आता कोणीतरी आहे जे सेव्हिंग्स अकाउंट वर व्याज देत आहे. 3 महिन्यांनी नाही तर दरमहा, आणि त्या व्याजावरही मिळतं आणखी व्याज दरमहा. माहितीये कोण आहे? IDFC फर्स्ट बैंक. हाच तर आहे यांचा ऑलवेज यू फर्स्टचा विचार. मी तर यांच्याशी नातं जोडलं आहेच. तुम्ही सुद्धा जोडले जा ना. IDFC फर्स्ट बैंक, ऑलवेज यू फर्स्ट. நீங்க யோசிச்சிருக்கீங்களா? ஃபோன் பில், எலக்ட்ரிசிட்டி பில், EMI ஒவ்வொரு மாதமும். ஆனா உங்க சேவிங்ஸ் அக்கவுண்ட்ல வட்டி 3 மாசத்துக்கு ஒரு தடவை. விடுங்க, ஆனா இப்ப யாராவது இருக்காங்களா சேவிங்ஸ் அக்கவுண்ட்ல வட்டி தருவாங்க? 3 மாசத்துக்கு இல்ல, ஆனா மாதம் தோறும். அதோட அந்த வட்டி மேலேயும் கிடைக்குது வட்டி மாதம் தோறும். யாருன்னு தெரியுமா? IDFC ஃபர்ஸ்ட் பேங்க். இதுதான் இவர்களின் ஆல்வேஸ் யூ ஃபர்ஸ்ட் என்பதோட சிந்தனை. நான் இவர்களுடன் இணைந்து விட்டேன். நீங்களும் இணைந்திடுங்கள். IDFC ఫస్ట్ బ్యాంక్, ఆల్వేస్ యూ ఫస్ట్. ఎప్పుడైనా ఆలోచించారా? ఫోన్ బిల్, కరెంట్ బిల్, EMI ప్రతి నెల. కానీ మీ సేవింగ్స్ అకౌంట్ లోకి ఇంట్రెస్ట్ 3 నెలలకి ఒకసారి. కొనివ్వండి, కానీ ఇప్పుడు ఒకరు సేవింగ్స్ అకౌంట్ లోకి ఇంట్రెస్ట్ ఇస్తున్నారు 3 నెలలకి కాదు, ప్రతి నెల. పైగా ఆ ఇంట్రెస్ట్ మీద కూడా ఇంట్రెస్ట్ వస్తుంది ప్రతి నెల. ఎవరో తెలుసా? IDFC ఫస్ట్ బ్యాంక్. ఇదే మరి వీరి ఆల్వేస్ యూ ఫస్ట్ అనే ఆలోచన. నేను జత కలిసాను వీళ్లతో. మీరు జత కలవండి. IDFC फर्स्ट बैंक, ऑलवेज यू फर्स्ट.
कभी आपने सोचा है फोन बिल, बिजली का बिल, EMI हर महीने, पर आपके सेविंग्स अकाउंट में इंटरेस्ट 3 महीने में एक बार? छोड़िए, लेकिन अब कोई है जो सेविंग्स अकाउंट में इंटरेस्ट दे रहा है 3 महीने में नहीं, बल्कि हर महीने, और उस इंटरेस्ट पे भी मिलता है इंटरेस्ट हर महीने. पता है कौन है? IDFC फर्स्ट बैंक. यही तो है इनकी ऑलवेज यू फर्स्ट वाली सोच. मैं तो जुड़ चुका हूं इनके साथ. अभी जुड़ जाइए ना. IDFC फर्स्ट बैंक, ऑलवेज यू फर्स्ट.
কখনো ভেবে দেখেছেন ফোন বিল, বিদ্যুতের বিল, EMI প্রতি মাসে, অথচ আপনার সেভিংস অ্যাকাউন্টে ইন্টারেস্ট 3 মাসে স্রেফ একবার? বাদ দিন, তবে এখন একজন আছে যে সেভিংস অ্যাকাউন্টের ইন্টারেস্ট দিয়ে চলেছে 3 মাসে নয়, বরং প্রত্যেক মাসে। আর সেই ইন্টারেস্টেও পাওয়া যায় ইন্টারেস্ট প্রতি মাসে। বলুন তো কেসে? আইডিএফসি ফার্স্ট ব্যাংক। এটাই তো এদের অলওয়েজ ইউ ফার্স্ট এর চিন্তাধারা। আমি তো যোগ দিয়েছি এদের সাথে, আপনিও যোগ দিন না। આઈડીએફસી ફર્સ્ટ બેંક, ઓલવેઝ યુ ફર્સ્ટ। તમે ક્યારે વિચાર્યું છે ફોન બિલ, વીજળીનું બિલ, EMI દર મહિને, પણ તમારા સેવિંગ્સ એકાઉન્ટમાં વ્યાજ 3 મહિનામાં એકવાર? હા, જવા દો। પણ હવે કોઈ છે જે સેવિંગ્સ એકાઉન્ટમાં વ્યાજ આપી રહ્યા છે 3 મહિને નહીં, પરંતુ દર મહિને, અને આ વ્યાજ પર પણ મળે છે વ્યાજ દર મહિને। ખબર છે કોણ છે? આઈડીએફસી ફર્સ્ટ બેંક। આજ તો છે અમને ઓલવેઝ યુ ફર્સ્ટ વાળી સોચ। હું તો જોડાઈ ગયો છું આમની સાથે, તમે પણ જોડાઈ જાઓ। આઈડીએફસી ફર્સ્ટ બેંક, ઓલવેઝ યુ ಫಸ್ಟ್। ಎಂದಾದ್ರೂ ಯೋಚಿಸಿದ್ದೀರಾ ಫೋನ್ ಬಿಲ್, ಎಲೆಕ್ಟ್ರಿಸಿಟಿ ಬಿಲ್, EMI ಪ್ರತಿ ತಿಂಗಳು? ಆದ್ರೆ ನಿಮ್ಮ ಸೇವಿಂಗ್ಸ್ ಅಕೌಂಟ್ ಅಲ್ಲಿ ಇಂಟ್ರೆಸ್ಟ್ 3 ತಿಂಗಳಿಗೆ ಒಂದು ಸಲ ಬಿಟ್ಟಾಕಿ। ಆದ್ರೆ ಈಗ ಯಾರೊಬ್ರು ಸೇವಿಂಗ್ಸ್ ಅಕೌಂಟ್ಗೆ ಇಂಟ್ರೆಸ್ಟ್ ಕೊಡ್ತಿದ್ದಾರೆ 3 ತಿಂಗಳಿಗೆ ಅಲ್ಲ, ಪ್ರತಿ ತಿಂಗಳಿಗೆ। ಮತ್ತೆ ಆ ಇಂಟ್ರೆಸ್ಟ್ ಮೇಲೂ ಸಿಗುತ್ತೆ ಇಂಟ್ರೆಸ್ಟ್ ಪ್ರತಿ ತಿಂಗಳು। ಯಾರಂತ ಗೊತ್ತಾ? ಐಡಿಎಫ್ಸಿ ಫರ್ಸ್ಟ್ ಬ್ಯಾಂಕ್। ಇದುವೇನೆ ಇವರ ಆಲ್ವೇಸ್ ಯು ಫರ್ಸ್ಟ್ ಎಂಬ ಯೋಚನೆ। ನಾನು ಇವರೊಂದಿಗೆ ಸೇರಿಕೊಂಡಿದ್ದೇನೆ, ನೀವು ಸೇರಿಕೊಳ್ಳಿ। ಐಡಿಎಫ್ಸಿ ಫರ್ಸ್ಟ್ ಬ್ಯಾಂಕ್, ಆಲ್ವೇಸ್ ಯು ഫസ്റ്റ്। ഒന്ന് ചോദിച്ചോട്ടെ, ഫോൺ ബിൽ, കറണ്ട് ബിൽ, EMI ഒക്കെ മാസം തോറും നിങ്ങളുടെ സേവിങ്സ് അക്കൗണ്ടിൽ ഇൻട്രസ്റ്റ് 3 മാസത്തിൽ ഒരിക്കൽ? അത് പോട്ടെ, പക്ഷെ ഇവിടെ സേവിങ്സ് അക്കൗണ്ടിൽ ഇൻട്രസ്റ്റ് നൽകുന്നുണ്ട്